Right, good afternoon, everybody, and welcome to the session. You must have seen last week, it was hell of a week. Everything have moved so aggressively, whether it's JPY pairs, whether it's chief pairs, whether it's gold, whether it's silver, whether it's dollar pairs. Everything was moving last week because that's the power of volatility. Okay. Now, this week we'll see what we have as an opportunities, and also I want you to just keep that in mind. This week we are going to see, potentially even from the mid of last week, we have started seeing risk off situation in the market. So I'll explain that to you. What is the risk off situation? Those who doesn't know, you need to know these two terms, especially when you are, having unstable times in the world. So you need to understand what the investors are thinking at that point. Okay. So whenever they are on the risk off scenario, you would expect something different sort of dynamics in the market. And when you are on the risk on scenario, you're expecting something slightly different dynamics in the market. I'll explain you both just for your information. This has nothing to do with the trading, but when you're planning the trades, that would actually help you. Now, before I kick off, could I have confirmation that you can see my screen and you can hear me well, please? I have already got one confirmation. I need 2 to 3 more. Fantastic. Brilliant. Thank you, Jason. Thanks, Samdam, Quinton, Irfan, and Craig. All of you, thank you for confirming, and Handy as well. Now, again, as I've mentioned, from this week onwards, we are going to expect market to behave in a risk-off scenario, which means investor will be expected to not take too many risks. And what they would be doing is they would be injecting their money into the risk-averse assets, which are safe havens, and they would be taking lesser risks from this week onwards. Why would that be? Because of the scenarios that we are seeing all over the world. We have seen the war could be, triggered between, between Lebanon, Israel, and between Iran. And last week we have seen that NFP numbers have triggered some sort of a recessionary alarm bells in the Wall Street. And that is something that is actually combining with the fundamentals at the moment. That's why we need to be extremely careful going forward. Okay. Now, that does not mean that you stop trading. That just means you are getting a lot of decent opportunities that you can actually make a lot of money. I'll give you some examples. I've been actually seeing whenever I have a risk off situation in the market, what I do is I just go to the bigger players and I see what they're really doing. Okay. So when I say big players, what do I mean by that? Um, Big players like, the hedge funds, big player like billionaires, big players like, BlackRock, Vantage, all of these, big players, they are already knowing something that we don't. So that's why we need to really figure out what they're doing in order for us to make decisions. Okay. And informed decisions are the ones that are going to make you money in the market. Okay. So what they've been doing that I've seen, last week, even on Friday, Berkshire Hathaway, um, that is Warren Buffett's company. They have sold actually a lot of stake in Apple, Microsoft, Tesla. Why would they do that? And they are keep on piling cash at the moment because they need to make sure when the market is dropping, they need to inject that cash to buy more. So again, it's like this. They are saving up for the time when they inject that into the market. And that is what I'm seeing the trends in most of the billionaires that's what they're doing at the moment. Okay. So we need to understand that why they are doing that. And that's where you need to understand and make sense of all of this, what's really going on around the world. As I've mentioned, they know something that we don't. They have a group of billionaires where they have the information. With that information, they utilize in order to actually make money for not only just one person, it is for many people in that group. And again, if one person is in loss, the other ones try and make sure that, everybody comes into profit by actually going against that position, because again, they have big money. So what they can do is they can move the markets. Okay. So this is what you need to understand going forward. Just plan your trades thinking that any safe haven that I'm going to sell going forward has to be extremely small risk. Okay. And anything that you think is a risky assets and you're trying to buy that, just be careful with that by risking very, very small. I'm not saying you should stop buying the risky assets like Bitcoin, like, most of the majors, like most of these, yen pairs, alternatives. Why I'm saying that is because I want you to take lesser risks on them. That is a part of the planning. Okay. And I've just mentioned that we are very close to, starting a massive war, in that part of the world. And again, it's not just only that part of the world that will be impacted; it will be the whole world that would be impacted. Now, again, some countries will be exempted from that because, again, they are actually trying to play a role of mediator. It could be, those countries will be the safe haven countries where you can actually secure your money. Now, your money in the banks are not secure. I'm telling you every single, session, every single month, please make sure you utilize that. Because if we hit the recession and the banks will go down, they will freeze your money. Go back to, to the case study of Lebanon. What happened to that country? Overnight, they have frozen the assets of those people who have been holding millions and billions of dollars in their bank accounts, and now it's been more than 5 years. They are still frozen. Why? Because the country does not have enough resources to pay off those or withdraw those money. Okay, that's what usually happens when you are actually going to the desperate times. Banks, they try and secure themselves. If you go and read your manual, the terms and condition of your bank, in case of banks liquidating, in case of any recessionary move, your money is only be secured until the 85,000 pounds or dollars in whichever country you are, because they wanted to make sure after that it's not their risk, yours. So you need to be careful in that, and you need to be wise enough to in order to plan yourself now. And again, as I've said last week, we have seen that the recessionary triggers have actually hit the market. Why? Because we have seen that the BOE has reduced the interest rate as well. Now the next one is going to be pretty much Feds. And again, I'm not expecting them to do it now. I'm expecting them to do it on the 4th of November. Why 4th of November? Because you must have seen that in the UK as well. It's pretty much the same thing that has happened. They were waiting, even though the CPI was pretty much spot on to the target that they were expecting, below 3%. Even then, they didn't reduce the interest rate because they were waiting for the new government to start. As soon as that has been done, they have reduced the interest rate. And it's going to be exactly the same scenario. 2nd of November, I believe, will be the election in US. And on 4th of November, whenever they are meeting on 4th of November, Feds will start to pivot. And as soon as they will start to pivot, that will be the trigger for the entire, stock market to plummet. Okay. And this is what you're going to see going forward as well. You might actually see a push up, push down. But again, for the next 2 to 3 months, we are going to see that market maintaining the sideways movement. And that's what you should be planning. And you must have seen that last week. Dollar was going down, indices were going down, gold was going up, oil was going down, Swiss franc was going up, and Japanese yen was going up. So there is no correlation in the market whatsoever, because that's what somebody, I remember asking the question, if you're expecting dollar to go to the downside, how can you expect the indices to go to the downside? And my answer to them was, whenever you are in desperate times, you do not look for correlation in the market. What you do is they get rid of the risky assets, and indices are always risky. Okay, compared to the gold, compared to the silver, compared to any of these, Swiss and yen as well. Again, bond market has taken a quite decent hit last week. Again, all of these, they are not small things, they are massive things. Okay. And again, you have seen that the BTC has tapped 70K and then started to break to the downside. Why? Because it's risky assets. You're seeing that the volume in the crypto altcoins are the lowest one. Okay. Why this is like that? You go back to the last time when they started to give a bull run, they were actually having a similar sort of a volume in the old coins, pretty much like dead. Why? Because it's the storm that is coming, and before that, there's a calm. And that calmness is telling you that, the bigger players are about to enter. Again, I'm not expecting them to enter now. I'm expecting them to enter from October, November time. Between the mid of October all the way towards the end of November, you're going to see that this time is going to be the bullish time for the crypto market. Okay. Now, that altogether, I want you to listen to it again. That's the reason I'm actually talking very, very slowly, because I want you to register that in your brain. And when you're planning for the next 2 to 3 months for your long-term trade, short-term trade to medium-term trade, you're always going to be making sure you're not on the wrong side of the trade. Okay. That is the fundamentals and the geopolitical part. Let's have a look at the calendar. But before that, um, let me see what messages do you have so we can go ahead with the calendar. Good day, Mr. T. Trust you keeping well. AV good. Thank you, Jason. Thank you, Fazan. Hi, T. DXY and GU analysis will be interesting because after interest rate, yeah, we will go into detail of them. There are some structures that have changed the structures last week because, again, there was a lot of volatility in the market for pretty much all of these, currencies. So we'll explain that, what structures have changed. If they have changed, what will be the next scenario? Deepak, you mentioned that the US dollar will be bullish in August after NFP on Friday. Is it still valid? Deepak will explain that. Again, seasonality is something that is, again, it's bullishness showing in August because of seasonality. Now, that seasonality does not mean that it needs to go from the day one. See, indices seasonality kicked in on the day one. You see here? So when you go to the indices on the 1st of November, you see it was kept on pushing to the upside. 1st of November, market started to drop because the seasonality started to kick in. Now, some of the pairs, you will see the seasonality kicking in now. Some of them, they will be starting to kick in perhaps from the second week onwards. Now, can you just simply trade seasonality? You cannot, because if it was that simple, you could just simply get the seasonality and then you can just simply buy and sell looking at the seasonality. It doesn't work like that. What it does is you can expect market to respect the seasonality if the structures is in the same alignment. Then you can expect that to actually play a role. Now, if you ask me, DXY is ready because of the seasonality, I would say from this level here, I don't care what the seasonality is saying. Structure is not telling me that. Now, what will be the structure telling me and where will the structure will tell me? That's what we will talk about today. Okay. Mercia, I don't think we are going into the recession. What is this non-farm payroll report will do is force the Feds to cut interest rate faster, sooner. But it will take the market a couple of weeks to figure that out. What's your take on this? Mercia, I really hope that, we are not going towards recession. It will be a win-win scenario for all of us. But the wise person should always plan for the worst. So if the thing does not go to the worst, you're still better off anyway. But if it does go to the worst, we are still not getting shocked. And that's why we are preparing ourselves for that. Now, I'm not saying that this recession is going to be the similar recession like we have seen in the last, few decades and centuries ago. This one is going to be a bit different one. We have seen that. What is the recession really? The definition of recession is when you have 2 consecutive quarters going under, which means you're not making money at all as an economy. And that's what we call it as a recession. So you take that as your own self. If you're making money 2 months, you're not making money, 3rd month, you will be actually under. Why? Because if you're a job working or if you're working full time, and if if anyone, let's say me, if I lose my job, if I'm working full time, anybody you see here, once your reserve is over, you can't survive. And that is what is called a recession for myself. And that is what we are actually predicting for the future as well. Why? Because of so many factors that I've just mentioned. Why? One, it will be always the dynamics of the market. Whenever you have interest rate going up, stabilizing, and then starting to go to the downside, in that downtrend, you always have that recessionary move. Why? Because it actually imbalances the dynamics of the market, and to balance itself, the recession needs to trigger. Okay. And that is total economics. And again, on that, if it doesn't happen, we are in a very good situation. We will keep trading, regardless whether it's recession or not. We will be making money. That is the real thing here. Okay. That's what you don't worry about. Like, If recession comes, we won't be able to make money. We will actually make more money. Why? Because market is not going to give much more of corrective structures. They are going to give you, keep pushing the aggressive moves, so impulsiveness into the market. If instead you go, previously you were making 100 pips, this time you will be making 150 pips. Why? Because the market will move faster. That's what happens when the trigger recession comes, because you get much more volatility in the market. Why? Because there is a sell-off. There is a scenarios in the market where investors are actually holding their money in their hand, like Warren Buffett is doing at the moment. So that's what I'm actually trying to prepare you for. Okay. Again, it might not happen, but if it does happen, we need to be prepared for it. That's the whole idea of it. Quinton, does risk off also tie in with the BTC August decline? That is correct. Still on BTC, do you think we are in a larger consolidation phase before the next up move? Some indicative reactionary levels to look at or be aware of would be appreciated. Indeed. Quinton, we'll touch base on those levels today. Okay. As I've mentioned, 70K will be the level if market does not give you a break sharp to the downside from that level, instead consolidates, then it's a push to the upside. But it started to actually give us a deeper decline. We'll see what are the next levels for that. Please describe euro dollar, pound dollar, and gold with the price levels. Ricky, yes, we'll do that. You had mentioned you hold crypto for the 200 days, so we are looking at October for the blast of tea. October mid to November, that's what I said. Correct, that's correct. Tahimur, what do you expect for oil if war starts in the Gulf? You would expect oil to actually keep pushing to the upside, okay? Because again, in those sort of times, what you would expect, because oil will be the main ingredient for the oil, for these armories to actually work on, okay? And that's why you would expect the oil to actually get stronger and stronger, being bullish. And especially at this level where the oil is at the moment, structurally, it is ready to go to the upside. Fundamentally, it looks like it is going to the upside. Thirdly, geopolitics are actually supporting. If war kicks off, that's what I'm seeing for the gold and oil. This year in gold, can we expect 2,400 to 2,600? Very, very possible. You might actually even see 2,500 this week. And Irfan, has there ever been a crypto bull run during a recession? Irfan, remember last time when we had a recession, it was 2008. At that point, Bitcoin was less than even $100. So again, at that point, many of us didn't even have a clue what the Bitcoin is. Let's be honest. So you cannot expect, this is the first time scenario that's going to happen. And again, I'm not linking the recession with the Bitcoin bull run or crypto bull run. I'm linking that with the election results of US, because Trump is pro cryptocurrency. That's why I'm expecting him to convert some assets, some strategic reserves from dollar to Bitcoin. And when he does that, that's when we are going to see some decent movement in the market, because it will give the confidence to the investors that if the reserves of United States will be in Bitcoin or in these cryptos, then that means it's going to stay forever or stay for at least a good decade or two. Hi T, could you please spend more time when visiting Chief and Swiss Pay, especially going forward for the next few weeks? Many thanks. Yes, Mo will do that. Craig, but what if Trump don't win? That is a very good question. What if he doesn't win? If he wouldn't win, then we are going to see some sort of a messy, complex structure, but that does not stop the bull run. It still will happen, but it will be just a messy one this time. But again, like I said to you, at the moment we are talking about the market, ground reality. And the ground reality is he looks like he's winning there at the moment. Now, again, it could be something you see here. What happened in UK at the moment, you could never imagine that UK economy would be actually, going through all of these riots that are happening. It's the third world countries, things are happening there. So what I'm trying to tell you is we need to be always expecting market to give us some sort of scenarios. If that scenario does not happen, the other scenario will give you a similar sort of a structure, but a little variation in that. Okay. And that variation does not mean that it's going to change the bigger picture. All it's going to do is it's going to move the market slightly later. Okay. That's what I can, I can see happening. Right. That is pretty much most of your question. The rest of the question I will touch base shortly. Let me start the session. and go through the fundamentals calendar and the charts before we take any more questions. Right. Last week we have seen, by the way, I want to start with the last week. We have seen last week that the market has given us this. Now, despite CPI being negative into, for the Swiss became very, very strong. Why? Because, the geopolitical situation, the pestle factor has taken over this news here. Okay. Even though they're supposed to be making Swiss weaker, but it didn't. Why? Because we have been hearing the news that anytime, Iran could start a war, or Lebanon could start a war with Israel, and then, we could actually go to the escalation very, very quickly. We have been seeing the news, that many countries have asked their citizens to come back as soon as possible if you are in, nearby Lebanon or, or Iran. So what I'm trying to tell you is because of that whole scenario, what market has done is they have taken the dominance from the instability side and, ignore that negative 0.3%. As I've said, that this KPI is supposed to make chief weaker. It didn't do that. Instead, it actually made it much more stronger because of the other scenarios, geopolitical scenarios. Now, we concluded the week with the average hourly earnings, as you can see here, that has dropped. Non-farm payroll has dropped. Unemployment rate has shot up. And that's not small numbers. Factory orders, as you can see here, has dropped as well. So this is all saying the economy is slowing down massively. We have a debt piling up, and they keep on pushing it under the carpet. This on top of the debt, plus when the pivot will start, the imbalance will be, in place. And that's why you'd see that these will be imminent moves that market is going to take to settle down, to balance itself. And that balance will come from the recession. Now, what's next? This Monday, we are expecting ISM manufacturing PMI from the dollar side. Again, they're expecting this number to be quite positive compared to the last actual. I don't see at the moment, it probably would just give the small push to the upside for the dollar, but then one more drop is likely in this one towards 103 level, which is not too far from here anyway. So again, if market has already done that, that's when you're going to see some decent, movement to the upside as a bullishness. Tuesday. Now on Tuesday, we would be expecting the cash interest rate. That cash interest rate, they're expected to keep it as it is. Despite we have seen that we have seen that last week, the week before, I believe we had a CPI from the Oz side, and they also had sort of a similar sort of numbers. They expected to drop that number, but then the number came through as it is. So again, this time they might do the same. But from the structure of Oz, out of all the majors, we have something that needs to break down the Oz and then push right back up. That is the structure I'd be interested in out of all the majors. Then we have employment change and unemployment rate from the New Zealand. I'm a bit surprised with these numbers that they are expecting, because the last actual they were expecting 4.3 unemployment rate. This time they're expecting this rate to go up by 0.4%. That is not something usual. If anybody in here from the New Zealand, I'd like actually some sort of a highlight on this one about the ground reality. Is it really happening? Is it people losing jobs there at the moment? If that is the case, again, you're still expecting a similar sort of scenario where you can expect a recession to trigger. And again, these are the things that you keep an eye on. These are the KPIs that you keep an eye on, okay? And these KPIs are telling you which direction you're heading, okay? And again, if this is the number that you're expecting and it comes as actual 4.7, you would expect New Zealand to stay weaker and then push right back up after this news. But again, I do believe that it's a strategic move that they have actually added here 4.7, because they need to push the New Zealand to the upside. Okay. And again, it's a bigger jump here from 0.3 to 0.7. That's if market comes even 4.6, you're going to see some decent push to the upside for the New Zealand. That is what I'm speculating at the moment based on this number. Okay. Wednesday will be a quiet day. In terms of the volatility from the news, you would not expect such a thing. And again, this is the day you would expect market to actually respect only the structures. Okay. Thursday, we are expecting RBA governor speaking and an unemployment claim from the dollar. Again, the unemployment claim, we have seen the NFP last week, so don't be surprised if we get another surprise here. If dollar wants to come down, this probably would be one of the news unemployment claim on Thursday, which will break the dollar down and then start to push to the upside from Friday onwards. Okay. We'll conclude the week with the employment change and unemployment rate. They don't have any expectations at the moment, but the rate, as you can see here, if you look at that, this rate has kept on pushing to the upside here. And again, CAD is quite weak at the moment. Oil is dropping, as well. So again, the economy is quietly based on oil as well. So at the moment, I won't be surprised if this number comes out as 6.4 and above. And if that would be the case, you'd expect further drop in the CAD, which means the CAD alternatives would have a decent push to the upside. Okay. Now that was the calendar. Again, I try myself now going forward that I'm giving you much more detail. The reason why I'm going to do that is because I know that what market is going to do in the next month and a half until the US election. And that's why the more information I'm going to give it to you, I want you to register that. And if you're struggling with something, make sure you watch the recording again. For our pro traders, make sure, please join the daily sessions going forward, because they will be extremely powerful and helpful going forward until November. I want you to please do that. Even if you're not really having time, before you take any trade, just go to our daily archive. Just check that, what we have said in the daily ones, because market might actually be changing the structures very, very quickly during this time until November. And I want you all to make sure that you don't come on the wrong side of the trade. Okay. Again, if you are trading, take lesser risks if you're not sure about something. Okay. Right. Quickly before we kick off with the Forex pairs, let me just finish this messages. I've got just only a few. Hi, Professor T. Please look at Sophie and XLN. Yes, we'll do that. Anthony, good afternoon, Mr. T. Good afternoon, Zahir. What is the difference between the $49 and $145? $49, guys, is just a starter pack where you can just simply feel the vibe of what we do here. But with the 145, which is a WTW Pro membership, you really feel what we are really doing here. Like, you come here every day, you'd see me telling you this is the structure. We teach you how you can do it yourself in that pro membership. And then also on top of that, you have access to our daily session live. Every day we have 2 sessions. And again, that's why I said to you, it will be critical for you to join them. If you can't join them, watch the recording, but do that, because this is what you need to be really. These are going to be the sessions. And in the next 6 months, we are going to get a massive opportunities in the market. Remember, the money that you make is not when the market is bullish, is when the market is bearish. And that is what we are going to see all over. And that bearish market comes with a lot of opportunities. So this is why, get ready for it. Okay. Ricky, and the rest of the differences, you can actually read it on the website. Everything will be crystal clear. Once you go to the website, click on the pricing, everything is actually, point blank for you in front of, your pricing page. What's included, what's not included. Slack membership will be included in that. You'll be a part of the community from day one if you have already watched all these chapters. If you have watched them, mark them as completed, making sure that it's mandatory for all of you to watch the chapters before you get added to the Slack. And then you have, EA robot as well, expert advisor, where the robot can actually trade automatically using one of the strategies that we are going to teach you. And we have embedded that strategy into this robot. Okay. So these are the many differences. Again, starter is just like, you need just the basics, which, you already have been trading for the last 10, 15 years. You have the knowledge. All what you need is, somebody to guide you which direction. You play that along with your analysis, and then you trade that. That is the starter for those people, or somebody who does not know anything and they wanted to start with the starter and then upgrade to the pro once they understood what we do here. So again, with the starter, I wouldn't expect you all to understand what we do inside. Okay, it's just like I would say it's not even a trailer. Right. T, happy Sunday to you. All members at WTW sure have won big on gold. You won't believe I lost. Done something wrong and go emotional trade. Emotional trade should never be the case, Victoria. Again, as long as you know what you have done wrong, please make sure you journal that, because this would help you massively going forward. And I want you to actually put it somewhere next to your screen that needs to be a reminder for you that never do that again. Okay. I'll tell you something. Back in the days when I used to be, like 9 years, nine and a half years ago, when I used to make the mistake and I knew that I have made the mistake because I've done some emotional trades, what I used to do, I used to actually to punish myself. I used to take the loss. Why I would do that is because I wanted to make sure that I would never ever forget that loss. Okay. And that is the punishment that has made you stronger. And this is what I would recommend you. Not at the moment, we are here for you. The reason why I'm telling you my story is because I want you to understand that to remind yourself, it's critical for your brain to register that. And next time when you're going to do that, it will remind you that. Okay. That's what you're going to do. James, your internet cuts in and out. Could somebody also confirm that is it the case? Because I do see that charts and everything is pretty much live for me. Could you guys hear me? Very good. Thank you, Jason. Probably, James, it's from your side. Thank you. The gold analysis are the time of the daily sessions. Yes, we do them on the daily basis as well. Fantastic. Brilliant. Right, let's start with DXY.